Good afternoon, traders, and welcome back to this week's Hot Stocks Outlook for February 16th, 2018. Hope you're all having an excellent week in the financial markets. And of course, we have a lot to cover this week with more of that volatility remaining in the markets. And so we're going to take a look here at Corning, Gorilla Glass, really a basic materials there, financials. We've got energy, pharmaceuticals, and also the home building stocks, which had tremendous rallies at the beginning of the year, but it looks like it's time to go ahead and take some profit on a lot of those shares. So we're going to show you exactly how you do that here. Now, we're going to start here with Corning though, and what we have here are daily bars and candles. So obviously a couple weeks ago we had that big decline in the S&P 500, and a lot of individual stocks have not really recovered. So while the S&P may creep up a little bit each and every day, there's a lot of individual stocks that are not performing well, and that opens up opportunities to actually short the market or certainly take profit had you been long some of those stocks like Pulte Homes and those home building stocks. But here in Corning Gorilla Glass, what we have is the daily bars and candles against a traditional moving average. This is our actual moving average, which is really a summary of what's already occurred in the markets. That's really our baseline to understand, okay, what's going on, what's already happened in the market. And what we're comparing that to is a predicted moving average generated via the artificial intelligence and neural network technology found within the VantagePoint software. So whenever we see a crossover between these two values, it suggests that there's been a change in the overall trend direction, and we therefore want to look to essentially short the market or certainly take profit on any long positions. Now, in addition to that predicted moving average, we have a couple other predictive indicators that really round out this forecast. The first of which being the neural index. And this is an extremely accurate 48-hour indicator, or really a 2-candle indicator. So very short term, but helps you know really how to throttle your trade when you should expect excessive weakness or some short-term strength, sort of counter trend as far as what you're seeing from the predicted moving average. And lastly, you're provided with a predicted high and low before every single trading day. So you really have all of these tools letting you know intraday, over the next 48 hours, and what is the overall trend to help you make much better, much more efficient trading decisions in the market. And so what we can see here is we've gotten this crossover between the predicted moving average, suggesting the trend is now down, and then we would want to look towards those predicted high and lows for good intraday levels to go ahead and short the market, set a short position, or take profit on any long positions. And you see how accurate these predicted levels are as the market continues to trade. So not only is that going to help you get into the market and start shorting the market, but as the trade continues, you get really nice intraday levels. So you can see here, while you're getting a lot of really excessive weakness from that 48-hour forecast, we understand the trend is now down, and that's a really perfect opportunity to go ahead and set a short position and realize some weakness over the subsequent next 48-hour period along with that overall trend there. So that's just what I want to highlight, is regardless of the trading style and approach, you really got all the tools here to understand, okay, well, where should I be going long? Where should I be going short? And really, how aggressive should I be getting with those positions over a given period of time here? So we can see with this opportunity here, we've got the market, and a lot of these markets are significantly down, 14% in just 14 trading days. Bring this over to XL Capital, which this is an opportunity which, even with that weakness we've seen in the S&P 500, has still forecasted consistent strength to the upside. So you're able to come into this market, recognize the trend has started moving up, and again, use those predicted levels that you get each and every day to guide you with where you want to be adding to that position. So you can take some short positions and some long positions, but make sure that you're doing them in line with, the accuracy of these predictive forecasts, so that you're not getting out of your winners too soon. And of course, riding those winning trades and not cutting your winners short, essentially. So really nice opportunity here in XL Capital. And just really no weakness forecasted from the moving averages and even the neural index, pretty consistently forecasting that market to keep moving higher, but really gotten a really nice trend here. So we see this market here over the course of 23 trading days is up 20%, while a lot of these other trades have just forecasted to the downside and suggested go ahead and short the market. Definitely don't be long, but there are some places few and far between here to actually go ahead and take some long positions. Here we get over to Hess, and this is just a perfect example of how all the indicators work together here. So here we have a crossover between the predicted moving average and the neural index. So there's actually a scanning feature here where we can really be presented with all of these fresh crossovers each and every night. But this is when you really want this on your radar to understand that, okay, well, the trend is now down. You'll certainly get volatility in the short term, but you see how even as this market creeps up, you actually get more separation between that prediction and the actual moving average. So you're getting that short-term strength where you're sort of bouncing higher, but the trend is definitely to the downside. So if you're coming in to trade this market, you're of course looking at the entirety of that forecast, looking at those predicted high and low ranges. And you see that if you're looking to take a short position, you're getting a really excellent, not only an intraday level to go ahead and short from, but over the course of these several days, that's about the best place where you can go ahead and start setting shorts in the market. Once the trend really picks up, again, these levels are really highlighted that, okay, well, if you short the market on this day, you're getting weakness over the next couple days. That short-term forecast is pushing the market in your direction. Again here, buying on intraday strength, but really taking advantage of that overall trend and the short-term weakness that's being forecasted from the indicators here. So if we again look at the overall trade here and the overall opportunity that's played out here, you know, a lot of these, especially the utility companies, some of these energy companies are doing all right, but, you know, 16% decline here in Hess. You know, you certainly don't want to be long the market as everything's really telling you, look, get out of the way, step aside. We can always get back into the market when these forecasts line back up, but avoid that 16% decline and make sure you're making money on the downside of the market as things are getting, again, you know, a lot more volatile and opening up opportunities both to the upside and to the downside. Here in Mylon, pretty much the same thing where we've got our crossover the downside, and you really just see this excessive weakness over the course of this move lower. We've gotten some short-term strength that you'd be aware of with your neural index. But again, you'd want to come in with your predicted levels, your predicted high and low ranges. And you see just how effective this is shorting at a really nice intraday level, but in line with that overall downtrend. So you're almost immediately getting this weakness in the market. You see a huge gap where you really needed to short the market several days ahead of time, or you're not going to make any money as the market gaps down and then just trades a little bit lower. Here again, you move up on short-term strength, hitting that predicted high, but excessive weakness over the next couple days. Again here, shorting at the predicted high, getting that weakness over the next couple days. So even if you're a shorter-term trader, or if you want to ride the entirety of that trend, you really understand not only when to start shorting the market, but when to add to that position and be a little bit more aggressive with going ahead and shorting those shares. So we see here so far, this market's down about 11%, but again, several opportunities to add to your position and make some really nice moves. I mean, just these trading days here, we were catching a couple day move. These are pretty significant declines in the market, about a 5-6% decline just in 2 or 3 trading days from those predicted high levels. So really what that does is really stretches out the range that you're able to capture, shorting at a good intraday high, but capturing weakness over the next 2 or 3 trading days there. Last but not least, let's go ahead and look at Pulte Homes. And this is something that over the past several months we were looking at as far as the upside. There was D.R. Horton, Lennar. A lot of these home builders have gone up, upwards of 100% over the past several months. But now things are showing some weakness and really forecasting that you need to go ahead and take some profits and even go ahead and look to short the market and make money on the downside as well. But you see how clear this is, where just a ton of weakness forecasted to the downside. Our predicted moving average is definitely to the downside, and you'd want to go ahead and bring in your predicted ranges. So you really understand, okay, well, I can go ahead and short at this level, catch that weakness. Short up here at this level where you see you gap up, immediately start trading lower. Short here, short here, short here. Several opportunities to short the market and make a lot of money to the downside because, markets tend to decline almost 3 or 4 times faster than they advance. So a lot of really great short-term trading opportunities. And really all you have forecasted here is excessive weakness. You've got the trend is to the downside, neural index to the downside, suggesting, if you can short at those predicted high levels, you've got a really nice trading opportunity there and it can really take advantage of a lot of this weakness and excessive volatility that we're starting to see here. So Pulte Homes giving back 15% in just the past 14 trading days. And, that's just as good as the market going up. You can go ahead and short the market, buy put options, and be making money on the short side of the market and on market weakness as well. So as always, guys, I hope this has been helpful. Be sure to ask any questions or comments you have below. But before I sign off here, this has again been our Hot Stocks Outlook for the week of February 16th, 2018. Best of luck to you traders out there in the markets, and bye for now.